Hi, ma'am. Am I audible? Hello. Am I audible?
Good morning, ma'am. Can you hear us, ma'am?
You don't have to be great to start, but you have to start to be great. Good afternoon. On behalf of the Department of Accounting and Finance of Ethiraj College for Women, I feel privileged to welcome everyone present here for today's webinar on forensic accounting and fraud detection. Before we get started, participants are requested to post their questions in the live chat, which will be answered during the question and answer session. Link for the feedback form will be shared in the chat box at the end of the webinar. The participants are requested to fill in the feedback form to receive their e-certificates. I would like to invite Mrs. Yamini, Assistant Professor, Department of Accounting and Finance, to deliver the welcome address.
Good morning. I welcome you all to the webinar on forensic accounting and fraud detection, conducted by Department of Accounting and Finance, Ethiraj College for Women. I take immense pleasure in introducing the speaker of the day, Ms. Sharanya Pandey. Ms. Sharanya Pandey is a young promising chartered accountant from Chennai. She has completed her undergraduation from MOP College with distinction. She has been associated with top audit firms in various parts of India during pre-qualification period and has a diversified portfolio experience in various areas like legal consultation, accounting and audit, GST, and income tax. She also carries experience with the leading American audit firm. She has taken various workshops in colleges, professional coaching institutes, and also in ICAI on Ind AS and other complex areas. She is now associated with an upcoming audit firm in Chennai, which also has its branches in other countries, specialized in the area of cyber, finance, and automation. I thank Sharanya ma'am for graciously accepting our invite to be the speaker of the day. Ma'am, it's our privilege to have you here with us today. Over to you, ma'am.
Thank you, Yamini ma'am, for that brief introduction. So it's my immense pleasure to be a part of this event today. Okay. Okay. So let us start this event with a small story. First of all, to start the story, we have to go back to 2008. So 2008, what has happened was when a bank, when a bank has started giving loans to, uh, in a prudent way, if you say, a bank will issue loans only to people, those who do have a good credit rating, because only they will be having the capacity to repay the loans back to the people, to the bank. But what has happened here was in 2008, in some part of the in US, a bank they have started giving loan that that is particularly the housing loan to every people. That is, even if they do not have the capability to repay the loan, they were given a loan. Okay. And the loan were given at a very high rate of interest. Why would a bank do that? Because they were like in that at that point of time, the housing market, that is the market for real estate, were at the peaks. So everyone's dream of in US were to have an own house, and the value of it would appreciate at a very in a geometrical progression. So that was and every American wanted that. So they started taking loan from the bank, and the bank also gave loan to them at a very high rate. So if you see, it's very like it's not beneficial for both, because they are giving a loan to a person who cannot repay it at a high rate, and they're taking loan and they can't repay it, but at the same time they can afford a house, they will have a house. So this was a scenario which was going on before 2008. But once 2008 came, people were not able to repay the loan. the market value, that is when people were getting, everyone were getting a new house, the demand for house fell down drastically. So when demand for the house fell down very drastically, people were not the house, the appreciation value of the house stopped. Didn't grow. Usually the real, if you put your invest your amount in a real estate like a land or a building, it should appreciate, right? But at a point of time it started, it didn't grow and it fell down because the demand was over and everyone was capable of getting a house. So what happened was the market value of the houses became down, the real estate sector fell down, so people were not able to repay their loan. What will bank do then? Then they will take over the property. So when they are taking over the property, they will sell it at the rate at what the loan is. If for example if the loan is for around 10 lakhs or 20 lakhs, the house price was around 5 lakhs. So this was a major cause, and this was the major event which led to the US Great Recession 2008. Okay, so here, why I'm giving this story, like I'm presenting this story is because this has a relevance to do with today's topic what we are discussing. So all those things we'll discuss it, like I'll answer the question like why, what is relevance of this story with this topic at the end of the session. Okay, as of now we'll just have this question, why, what is the need for the bank to do that, and why, like what all the sectors will get affected if because of all these gender this recession. Okay, so now let's just move on to the topic. So this is the numbers what we have seen in the great recession. In this, how the housing loan was given to everyone and they were not able to pay it back. Because of that there was like a lot of unemployment during that period. Nearly it was like around 9% of unemployed in 2010. And there are like a lot of numbers which are involved in it, and how they recovered and all we'll see it at a later point of time. So now this is the baseline for us to start today's topic: forensic accounting and fraud detection. Okay, so if you say what is forensic accounting is, like what does it has a difference with the other accounting? Why do you have named it like this? If you see, forensic accounting is the integration of accounting, audit, and investigative skills. This investigative skills is a new term which is brought inside this forensic accounting. This is what which makes it even more specialized part. Okay, and it is also study and interpretation of accounting evidence. It is about like you get the evidence and you seek, like you study it and interpret it. And it's not about just getting getting evidences. You interrupt the data what you get. Application of accounting methods to the tracking and collection of forensic evidence. So you put on like accounting methods and other analysis. You do some kind of statistical analysis so that you get better data out of the evidence. See, the evidence can be anything. It can be a voucher, it can be an invoice, it can be any kind of document or a contract or bank statement. Any kind of document can be there. But you put the extra analytical tools and analytical investigation so that it will give you a result. With that you can interrupt the other results and all. And examination of documents and interviewing of people to extract evidence. So if you with this evidences, you examine the documents and you question people also. In forensic accounting, the main thing what you do is basically the investigation part. You question people, you check on the documents, you see what can would have been the reason for fraud, what was the error there. And you see like every document or everything which you see it with an investigative perspective and not just as an audit perspective. So that's what it makes the accounting as a kind of a superior thing to audit. Okay, so why does a person will start a forensic audit? Why does a forensic audit come? Usually forensic audit are not as per your regulations. Like for example, if you see in the case of a companies act, it's a mandatory to do stat audit every year, but it's not a mandatory clause for you to do forensic audit. okay, or it's just by the, when there are like, when there's suspicion of fraud, when a court says okay, there's something, there's a fraud, but we are not able to find it out in the books of statements or financial statements which has been presented to us, but there's some fraud which is there, which is happening through few evidences you have got in the data, but you're not very sure like where is the exact fraud, or who is person who is behind those fraud. So in those cases forensic audit will be given. Or to litigation support services, when there's some kind of litigation which is going on and which you have to submit some kind of evidences for that, when that time forensic audit will take the picture, and they will do the investigation, and they would submit a report. Based on that, the court will consider those evidences as a material evidence for the proceedings. And for investigating and they to calculate the economic damages. Like for example, if a company is affected because of these frauds, it's not just the company which is affected because of the fraud, it's the entire economy which is affected. So to calculate like how much of damage is it causing to our economy, so to calculate those things the forensic audit also does it. And investigative and fact finding services, so it's basically you investigate things to find out, okay, who is the person who is involved in this, like what can be done. So it's not just end, the forensic audit just doesn't end where you find out okay, this is where the fraud has happened and this is where it's gonna end. No, it's also comes with the finding solutions, finding recommendations, so that this doesn't occur in the next like in the next, when we are going in the next phase also. Okay, so if you see what's the difference between forensic accounting and audit, because both seems to be the same, right? When you see forensic accounting, you're investigating there, audit also investigating, but there lies the difference. The difference, major difference between these two is the person, the person who is involved in this. If a person doing a if a person is in the category like an employee, a supplier, or a kind of a vendor, it's kind of all a third party persons, like you can all the persons who are outside business, but they are involved in fraud against the business. They have done anything which with the help of people or employees who's inside the inside the organization. And if they are doing a fraud against the business, then you would call it as forensic accounting. If for example an employee is an employee is a, for example, he is a cashier. He only takes care of the cash which is coming in and he is going what is going out. So if that is the case, then there is no segregation of duties, because he can swindle the cash in any way he wants it, right? So if that is the case, then he'll be taking cash and he'll be booking the any bogus entries for it or bogus expenses for it, which wouldn't have happened itself. So all these types of things will be coming under forensic accounting. And what is forensic auditing for in that case? We'll take that in the case of a, we'll take it as a board of directors or any persons like promoters, all the higher hierarchy people. That is the all the people who are involved in the management perspective. Those people, if they are taking care, if they are involving in these frauds, then it is for the business. Because if the management itself is that's the business, then it's going to affect the full business. So if the intention of the management is the board of directors are nominated with the intention as a representative of the shareholders. So their intention would be to take care of the business and make it a welfare for it, the investors. Okay, give it as a profit for the investors. But if they itself involved in a fraud, then it is for the business and forensic audit comes into picture. So that's a major difference between the forensic accounting and forensic audit. So forensic audit was conducted in the case of ILFS. Uh, ILFS was a case where ILFS was a case where they had kind of two books of records. Like ILFS case happened in around 2018, where they had like two books of accounts. One was what which was audited, and the other one which was not even taken into records. There were like so many contracts, and there were so many invoices which were not even considered and which not even reflected in any of the audit reports which were issued. So if it's not reflected in the audit, if it's not reflected in the audit report, then how would the investors know like such a kind of things is happening? So in that case, forensic audit came inside and they gave a report saying all these things were not reported in the audit report, and these are the things which are led to a loss of this business. Okay, so in foreign ILFS case, forensic audit was there, not forensic accounting, because it was a case relating to the management related. Okay, so next what we see here is forensic audit versus audit. What is the difference between forensic audit? Because both the things you are saying, we are going to do the same. Audit also we are going to check with the evidence. Forensic audit also we are going to check with it. But what does the difference is? Where does the difference lies is? Okay, first we say in audit, what we usually do is we give an opinion. We'll give a qualified opinion or unqualified opinion, saying no, or a disclaimer of opinion. We didn't even okay. We give a qualified opinion when we say everything is true and fair. Whatever the documents was presented to us, whatever the books were given to us, everything was true and fair. But when we give a disclaimer of opinion, we didn't get any documents at all, so we can't even give an opinion like what was there, whether it's correct or not. We can't give an opinion. So in that case, we would give an disclaimer of opinion. So we have like these 10 things that I guess most of you will be aware of it: qualified opinion, unqualified opinion, modified opinion, disclaimer of opinion. So these are the things broadly. But in forensic audit, they doesn't say anything. They say just one thing: whether the fraud has taken place or not. They would see, they'll check the documents, they verify everything, they investigate, they say yes, fraud has taken, or else they would give a comment, no, no fraud has been taken place. These are the two possibilities they have. They don't need to give an opinion on it. They are putting it directly on front. Okay, the techniques, the technique what is used is a substantive and compliance. Most of it, whatever the evidence what we get, we don't do audit for the 100% evidences, because based on every company, if you see whatever has been involved in fraud, it's highly impossible for anyone to do 100% verification to give an audit a report. So it will be a based on a sample based verification only. It will be based on a materiality. Okay, if we'll check what is the primary income for it, and based on that we put a professional judgment and professional judgment to come out with the materiality. Based on the materiality and sample based verification will be done. But on the other hand, for forensic audit, they are not doing a sample based. Sample based is they don't want a sample based. They wanted to do it in depth. Excuse me. So they don't wanted to do it in a in-depth verification, so that they even the smallest of smallest thing they don't want to neglect it. Because you have a concept in audit saying that if it's a altogether if it's an immaterial fraud, then you can ignore it. Like you can like 2 to 3 items may be immaterial, like it may be immaterial item wise, but when you put it together there may be a materiality. So those things will be checked. But in a forensic audit, you have to do an in-depth and investigative verification for each and everything, so that you come up with an solution whether something has a fraud has existed there, or some person has taken done any fraud there. So those things and all will be done in a forensic audit and not in an audit perspective. Okay, audit when we, then the next question will, okay, when will a person do in a forensic audit? Usually if you see, an audit will be taken normally after a period of time. We do it for a financial year most probably, and certain cases it will be like around 15 months. But in a forensic audit, it is nothing like, you don't have a compliance saying that this is when you have to do a forensic audit. You do it when the company is suspected for a fraud, and when a court gives an order to tell them, okay, you go and do the forensic audit, that's when the forensic audit period starts. And that too, if it's not for a particular financial year, it's for a like 2 to 3 financial years, or like multiple years together. So it even after you can it's just a thing that you can't suspect a fraud within a year or within a period, very small period. It would have existed over a period of existence. Maybe people wouldn't have noticed, or the third parties or the auditors wouldn't have noticed it somewhere or some reason. So it would have happened over a course of time. So it's for the period when it is agreed as per the terms between the court. And verification of stock estimation realizable value. So usually when we are giving any third party evidences, for example your actual report, your gratuity report, in an audit or valuation stock, it's all given by a third party. It's given by the management basically. They do the physical verification, they do the reports and all, actual valuation stuffs and all, gratuity valuation, and they give us the report. So based on that, we would be providing, we would verify the, in audit we would verify the correctness of that. But we can't ensure that the it is 100% correct, because it is performed by someone else and it is given to us by the management saying okay, we have these are the people who have done it. So 100% verification of it cannot be done. If it's a case of a valuation of stock, 100% verification is not wouldn't be done by the auditor himself. So it's based on a, it relies on the management's letter and certificate what they give to us. And in a forensic audit, it's not the case. They themselves will do the verification. They themselves will do all the respective whatever verification is required. They would proceed and they will do it by themselves. So that to get a rely, it's basically you have done all the process, all the process for audit has been over, all the process given by the management is over. But after that they have a suspicion. So to how do you take over the suspicion? They itself go and do that, do the works and find out is there whether there's any uh, sorry, whether there is any whether there's any misappropriation or a very inconsistency. Then off balance sheet item. Off balance sheet item used to vouch for its accuracy, and you do compliance procedures. But here in the in the off balance sheet items, like for example, if we take for the case of an ILFS itself, in the ILFS case, one of the off balance sheet or the item which was not even brought inside or which not even came into the purview of books was the credit agency part. The credit agency, okay, what was the role of credit agency? Why do you say so? When you are giving a loan to a person, the credit agency gives a credit rating. For example, they say okay, they come to under the A category, they come under the B category, they would repay their loan at a prompt, in a correct way, they would go under A category. They wouldn't pay the loan in a prompt way, so they would come under a B category. So this is how the credit rate agencies give the rating to a the people whom we are lending loan. And in the case of an ILFS, it's a non-banking financial entry. So the main objective itself is to give a loan to people. So if that is the case, then the major thing is the rate agencies. The credit rate agencies doesn't have to do anything monetary with the audit. So they doesn't come under the purview, because they are giving a report based on the people's capacity to repay the loan. So in forensic, so what happened when ILFS case was the forensic auditors checked the reports of credit agencies, and they found that to be false, because whoever didn't have the capacity to repay loan also were given an A category rating. So that those are off balance sheet items which doesn't come under the purview of audit. So those will be verified, and those were reports were given saying okay, these people were also have been a part of this fraud. So those will come under regulatory and they would come under the forensic audit. And adverse findings. So if you find any adverse finding, as I told earlier, it would be a negative opinion or a qualified opinion saying, you know, we are not giving a proper opinion to you. We are not giving because of these points what we have found out in audit, we are giving this opinion to you. But in a forensic audit, that's not the case. You say this is the fraud impact, and this is the identification, and what are these are the things which are these are the parties involved, and these are the things which we have found out. So in a case of an audit, after the negative opinion, the decision note need to be taken by the MCA, Ministry of Corporate Affairs, or the other parties. But here it's direct. The court itself involves in this, and they tell them okay, this is the amount of fraud and these are the people, and we will tell you what needs to be done to the people and as well as the company. So that's the basic difference between audit and forensic audit. Audit, you see, it's basically based on the books of accounts. It's based on opinion type, and forensic audit is fully of investigation type. You investigate every document and every evidence which you get, so that to get a detailed and a deep understanding. With it, in an audit, it's not possible. So in that case, forensic audit comes into picture, because for every company, if you're doing forensic audit, then it would be taking years. Excuse me. Okay, so the next topic what we are seeing is the, sorry, forensic accounting. So how would the process of forensic accounting goes? How do you determine it? So the process of forensic accounting would be, first there would be an basic background study about the company. So if in our case, if ILFS was the person who was involved, the the forensic auditors, the people who are involved, they would do a background check about it. They would do a background check about it. They would understand the company, what are the major loopholes which they could have across, or what are the areas which are suspected. So you do a very big in-depth background verification about the company which you are initiate when you are which you are gonna do a forensic audit for. So that will be your give your risk factors and all. You will have the external risk as well as your internal risk can be analyzed with this initial background check itself. So based on the risk what you have come across, you will develop a plan. You'll develop a plan saying, okay, so these are the areas which I need to give a very big priority to, and I have to do a very big verification here. So you develop a plan with this, like what are the strategies what you're going to use it, and what are the things which needs to be involved, and you develop an overall plan saying, okay, these are the things which needs to be checked, and these are the things, okay, we have to do a double check or a triple check so that we get a conclusion out of it, because those are the suspected areas. So you develop a plan based on it. Then what you do is you obtain relevant evidence. So this is the very important part, because for the evidence, there are a lot of possible cases that the evidence may would have been manipulated. You can't say that that's the original evidence. So whatever is given as evidence from a management couldn't be accepted as it is. Because if a document, if they are giving an invoice, it's very hard to determine whether it's original or a fake one. So every all the invoices needs to be checked once and documented, and in-depth check needs to be done, or else you wouldn't have get a confirm comfort as to the evidence is true or not. Next you do is your performing the analysis. Okay. So you what you do is you perform the analysis. Once you get the evidence, you do statistical analysis of the data what you have received. Sorry. You perform analysis over the documents you have received. You do statistical mapping. For example, if you've seen if you've seen a component of a financial of an expense, for example, if you have taken a legal expense, in that case, if for a previous year some amount was noted, for example, if some around of like 50 lakhs was reported, and in the current period if it's around like 2 crores or something, then you do an analysis like how can an expense like shoot up so much. Why? What can be the reason? Is there so much of cases available, or is there so much of cases pending, or is there new cases which were booked on the company? What can be the various reason so that this amount has shooted up this much? So you do it for every expense, and for everything you get up with a conclusion saying these are the things which has caused it for this amount to raise or to reduce. So you perform a detailed analysis for it. Next would be the reporting part. So the reporting part is it needs to be very elaborate. It needs to cover all the things, whatever you have noticed and whatever you have finalized, whatever you have found out in your forensic audit. So this reporting part, you do have a lot of standard you have like standard areas which you need to work on. Maybe we'll see it at the next slides and all. Then those reports what has been prepared by the forensic auditor will be given to the court for its further proceeding, and it will be the decision of the court as to what needs to be done because of the fraud, and what was the amount involved, and how much of damage it has caused to the economy. Okay. So next would be the audit techniques. What would you use? What are the audit techniques which you would use? So to come up with the conclusion as to the regarding the frauds, you would do is, as we discussed. First, you will the analytical steps would be, you just understand the business, because you should have a basic understanding as to what is happening in the business. And the next would be the possible and those which are needs to be involved, and which couldn't have been which couldn't have been evident from initial step 1 or step 2. So these are the areas which need to be again a brush through needs to be done. The next would be the technology steps. Use technology to gather data about symptoms. So what you do is like as we are moving from the manual phase of accounting, we are into something called as automation. So now when we are going to automation, we have to use artificial intelligence. You have like a lot of softwares like computer CAT, and that's the computer audit technique, CAS. So those are like kind of tools which you can use and to analyze any improper numbers which has been which is there and which needs to be captured. So you use technology for this, and you analyze the result. You analyze like what are the things, what are the results which have been caused because of all these whatever is recognized. So you do that, then the investigative symptoms, then you follow up after the whatever has been recognized, then you follow it up, then automate detection procedures. So these are like techniques for which with which you do audit of forensic, or what do you do for forensic audit. Okay. So what are the places where forensic accounts is required? Actually, forensic accounts is a very wide topic. It's not about a specific place only for this sector or for this industry. Forensic accounts is not required. You require for every industry. For criminal investigation, yeah, there are like a lot of crimes which is happening. Even for crime purposes, there are separate team of forensic accounts, like forensic people, but they don't come under this forensic audit category. But for criminal investigation purposes also, there's separate team who do forensic audits and all. And professional negligence cases, for example, all the professional negligence cases would be your compliance of your AS and IND AS and all. If your person is not following the gap, if they are not following any compliances which needs to be done, so those professional negligence cases also forensic accounts do take care. And arbitration related services, arbitration would be like when two people who decide they by mutual agreement that they shouldn't go to a court for any dispute between the contracts or between them for business related things, then it will be for an arbitration services. For those things also forensic accounts reports would be helpful. And fraud investigation, so that's what we have been discussing, like for all things forensic accounts would play a major role. Then settlement of insurance claim, yeah, there are like a lot of people who do a lot of scams which are going on. Like for if in case insurance related things, people do when an accident takes place, they do go for a claim. but there's a probability of the accident of not taking, or the accident would have taken place uh, by like would have taken place actually as an accident, or it may be the other scenario also, it may be the some other things which would have happened. So you should, when an insurance company is giving you a claim, it wouldn't give it as it is. It needs to do an investigation as saying, okay, yeah, truly it has happened an accident, so it is eligible for a claim. So those things all no, those things also. And dispute settlement, for any dispute settlements, or where you need an elaborate report as to any dispute, any frauds has been occurred. For example, if it's a dispute between two partners, so if they want to say one partner accuses the other partner for some fraud which has happened because of him, so those cases and all, the forensic accounts do take place, and they tell, yeah, one has fraud has happened, yeah, that's because of that only your net worth has been come down. So for those cases and all, forensic accounts do have take place. Okay. So this is just a brief summary of, I have given a brief summary saying that what are the reports will be there in forensic accounts. Forensic report, what will be there? Executive summary will be the totally background of the company. And whatever we have seen in the initial step, that would be the executive summary. Next would be the risk analysis. The risk analysis will be the whatever they have analyzed, the external risk, what is there in the when they are doing the audit, and what is will be the internal risk which they would be, what is the internal risk what they are issuing with the forensic audit. And external risk are those which oh, sorry, external risk they would have faced when they are doing the audit. So those risk analysis what they have done also will be documented for report purposes. And audit processes, it will be the foreign auditor who would say the audit process is what he had encountered and what he had followed and what are the steps which were involved in it, so that we came out with this solution, with this conclusion. Then the evidence of risk events, then you would say the what are the risk events which were you have were able to evident it, like the evidence what you have collected and you analyzed, and whatever you say, yeah, these are the evidences and these were the risk events which I have collected and have done it. Okay, so those are the notings what you have done out of the audit and you are giving it in a report. Then and then the next one will be the audit recommendation. So as I said earlier, your process of audit doesn't stop when you are finished with giving a saying the report saying, yeah, they are done a fraud. Your process ends only when you give an audit recommendation. You say, okay, how can you do, how can you stop this audit process? Like how can you stop this fraud process? Because fraud is not which occurs like on a day basis. It has been there for a year, so how would you put a check on that? So that's where the major crux of itself lies. Then the governance on recommendation. So when it comes under code, the code gives them a recommendation on the governance part in the future period. Next would be the fraud. So what is fraud is, actually we've seen it like uh, everything which is not acceptable, which is not even which is done with a motive to gain, to have an unlawful gain, would come under fraud. So that's where the major difference is there. So anything which you do, which an employee does or management does, or any person who is related to a business does to get an unlawful gain for himself, for his own personal need, would be determined as a fraud. So the vulnerable sectors to fraud is, if you say the major vulnerable sector to fraud is your real estate sector. Like around, when based on this report, if you see, around 52% of the fraud has taken place only in the real estate sector, and around 34% has been taken place in the financial services. So the major risk which we are facing is in the real estate sector. Okay. So fraud detection. So fraud detection is basically you. It's a process where you detect. Okay, this is where the fraud is happening. If, for example, if like three people are involved in a, if for example, I guess we have taken this example before itself. A person is handling cash. This person will be doing all the deposits, as well as he'll be withdrawing cash from bank also. He'll be also withdrawing. He'll also be taking care of the petty cash. So if that is the case, then there's every possibility, then he'll be mishandling cash. So in this case, what would be the better point will be there, when you'll have to a segregation of duty. The person who's depositing cash need not be the person who's withdrawing cash. When you segregate the duty, then this can be handled, like, no, to an extent this fraud can be at least prevented. So in this fraud detection is, find out where are the symptoms of fraud which is evident, like which is possible, or which has been which can be noted based on the procedures what we follow. Okay, so these are the few types of fraud detection techniques. So as we already discussed, the statistical data analysis are there. So you have probability, you have regression, you have data, you do analytical sync like variance analysis. So all these things would give you a picture as to the statistical data analysis, and all these are kind of manually, or which can be done through way of excel, or through formulas, are those things. And this side would be your artificial intelligence. You use techniques, various tools for it, so to find out, well, like, what are the uneven data, what is being entered. Because when a person is maintaining books of accounts or anything, books of accounts or any manual books, it's always like a manual entry. Even if you're using a software in a company like a Tally or SAP, you do all the data is feed in by a manual person. So there's every possibility of fraud to be involved there. Okay, there can be a prevention check of access based control, but still there is a possibility of fraud. So these are like few techniques which can be implemented in any company for prevention of fraud. When you detect fraud, yeah, where fraud is taking place, you come up with a, like, few prevention techniques, so that it doesn't continue it. Like, it can be the fraud amount can be like ranging to 10,000 to somewhere around lakhs or crores. But if it's a fraud is detected, then it's better to prevent it. So these are the few techniques. You design a fraud policy for your company. You design a profile, like, based on the potential fraud wherever it is possible. You design a technique for, you design a create a plan for it. You address all the whatever are the possible indicators. You address all the possible indicators in the plan. You implement those plans wherever it's possible, wherever the techniques are required. You implement that, and you monitor that regular basis, maybe a week, or a person is involved for it, like in a month, on a monthly basis or a weekly basis. You monitor the plan, and you deploy artificial intelligence in other than manual thing. You do deploy artificial intelligence and automated things, so that the manual error or manual fraud will be reduced to a major extent. Then when you monitor and when you deploy artificial intelligence and automation, then it would be reduced to a major extent. Okay, so let me go back to the scenario which I discussed initially. So as I told you, was the business was about the US recession 2008. When we just giving a brushing up, we said we have the banks have given loans to everyone, like, even if they are not having a good credit rating, they were given a loan. So now the bank fell, there was a great recession at that point of time, because they were not able to get the amount from the people, and they were not able to get the amount from the they were not able to sell the houses also, because there was no demand for the houses, and the rate were like very the rate fell down like anything. There was a share market crash, and there was a great recession which were like the human kind has always evidented. So that was regarding the 2008. So how do you connect it with our topic, forensic audit? Okay, so let me take another small scenario for it also, so that you'll be able to get a better picture. What happened was, in 1987, two people started a company. They were two brothers who started a company. They started a software related company. So the company were doing good, and around 2001 or 2, they got into listing. The company were doing really good. So what they did was, in 2001 and 2, when they got into listing, they started doing a fake invoices, and putting and fake invoices as well as faking their bank statement, and they started inflating their operating cost. The operating cost rose, as well as as well as their profit also rose. So when the profit was like around, if for example, if for example, if we take, when they rose their profit, operating cost to 10 lakhs, their profit also rose around like around 5 10, 15 lakhs. Because they were, because of the if just to give a background, if for a software company, the major asset would be their employees. So when you're billing to your client for your employees, it will be your operating cost plus your margin. So when your operating cost increases because of your fake bills and fake bank statements, your profit also, your, that is your revenue also increases. So this show because so this showed a great profit for investors. So when investors were investing in this company, they could see a very big they could see a very profitable entity. They can see this as a very profitable one. And when they focused also, it was like all that was shown was a very profitable one. So they were very much interested in the company, and investors starting invested like anything. They were crazy because the company is making huge profits, so anyone would be wanting to invest in this. So everyone started investing in this company, and it was going good. But one point of time, it took a hit. What happened was, these people, when they were getting like lot of investing, they were first initially investing all these in fixed deposits. But they wanted to, when they had surplus of cash, they wanted to invest in some other form. So one of those things which they invested was the real estate sector. So these people, they started buying house they were starting investing in real estate sector all through India. So when this was happening, you had, that was the time around 2008, there was a great recession. The real estate market fell down. So that hit the this company also. Okay, so in addition to all their fake bills, the real estate sector fell down. So they didn't have money, because they were not able to sell this price at the what they have purchased itself. So this took a very sharp hit. And the investors with whom they, the board of directors, whom this entity were there, they said, okay, we need not invest in real estate now, we may invest in some other sector now. Maybe we'll invest in fixed deposit, or we may invest in some other thing. So they had another subsidiary company also, which were also formed by these brothers. So they said, maybe we'll invest in that. But that's also was related to real estate. So they refused, the board of directors refused to invest in those companies also, because those also were doing a loss. So these people were questioned about the money and everything. Because of all these things, they were not able to sustain all these things. They were not able to find out, like they were not able to get the money. Like people started questioning about their income and the expenses, because all were fake. So when the board of directors started questioning all these things, the brothers who started it, they were not able to answer all these questions. So they gave a confession saying, yeah, we put it down. Yeah, we did a fraud, and this is what had happened. So this is what is the case of a Satyam scam. So this is what has happened there. If that in that case, what is the forensic audit or fraud detection is doing here is, after this Satyam scan happened, there were lakhs of people lost their jobs. And it's kind of sorry, it's people started losing jobs, and the investors who have invested in those companies have started losing their money. The investors are none other than the small people, who like salaried people, or any daily salaried people, or small firms, or small business people who have invested it. For example, if you take how does it happens is, if it is Satyam, there would be like a mutual for a in case for an example, if you take in for a case of a mutual fund, a mutual fund would have invested in a Satyam, they would have invested in 10 companies, out of which one company would be a Satyam company. And in case when and in that mutual fund, an investor, a salaried person, would have also invested in it. If that is the case, then when Satyam got hit, then the mutual fund would also be running in a loss. Even they would have entered in a 10 companies, they would have funds in 10 companies. When there's a very big hit in Satyam thing, then it would automatically reduce their net worth also of the mutual fund. So the net asset value of the mutual fund fell like anything. The share prices of Satyam fell like anything. So the investors, the small investors who have invested in it, believing it would go in a great height, had also lost their money. And also this money which they have also this money of Satyam's, whatever the people who have invested or whoever has given loan also took a very big hit, and it caused an economic damage also. So what is the so the role of forensic auditor here would happen only after all these frauds has been, like if in this case the forensic auditor would come only after when the scam is over, like only after all these fraud has been, like this fraud has been would have been gone around 8 years. So the forensic auditor's role comes only uh, after two to 3 years, and the process would go around like 4 to 5 years. So all these roles will come only after that point of time. So what is the way forward? What is the solution for the investors who have who have invested in it, and what are the people who are employed in it? So those are like still an open-ended questions. So it's just that the forensic audits would what I foresee is, maybe in a future or in a course of time, after this Satyam scam, only the Companies Act 2013 said that that the auditors needs to be rotated every 5 years or 10 years. So a new rule was brought because of this scam. So obviously, when there are like a lot of fraud cases which is coming across, you have ILNFS, PMC, and here you have this Satyam, and all these, like a lot of scam when your frauds are coming across. So there's every possibilities the company, so that every possibilities that the government may bring in forensic audit as a mandatory, like every 5 years or every 4 years, based on the criteria of the paid up capital or based on the turnover. It is possible that they can bring it like in. So I see a very good opportunity to go and learn in forensic audit, since we see like every new rule has been, every new rule which is implemented brings about a new fraud case or new case which also brings in a investigation related things. So what is the way forward? What is an thought is, like instead of after all the fraud happening and all the sufferings and findings, and it's just taking time. Instead of that, unless and until if we have correction checks then and there, like at least once in 3 years or 4 years or 5 years, unless and until if it's not there, then this fraud is gonna kill even more lives. So it's just an open-ended, it is possible forensic audit may be mandatory, like we can't sure now, as of now it's not there. So every possibilities are there. So I see a future in forensic audit. So and even in ICI, have given ICI is the Institute of Chartered Accountants of India. They have given a sunrise areas, around 15 areas. So they provide a course for all the chartered accountants. They provide a course, if they want they can take regarding forensic accounting and audit. So they have given special course. So what is relating to BCom related students, it would be forensic accounting careers. There's an Indian Forensic Center of Studies, SFA, and many private institutions. The duration of course, and as per Indian Forensic Center of Studies, would be 3 years, and for other institutes and all it may vary. And you may take up this course, and I see a good future in it. And the eligibility for the course is not mandatory that you should have completed CA, CS, or CMA. Any BCom completed students would be eligible to do these courses. So it's a good thing to go forward. So uh, so that's it, I guess. That's it with the forensic accounting and fraud deduction. It is just, instead of, it's just an one liner to finish it off. Instead of detecting the fraud and doing the forensic audit after all the miseries, it's better to do it even before, like within a very very small period of time, so that we stop it even before something worse could happen. So with that note, I see I end this today's session. Any questions from anyone?
Yes, ma'am. Does forensic accounting require any professional qualification like CA or CMA, CS?
No, no, it's not mandatory for to have any CA qualification. Even with the BCom, you can do it. That's what it depends on the institute. Like every institute has a separate eligibility list. So with BCom, we can do it.
What type of evidence does forensic accountants use?
What type of evidence? It's the general evidences which you get it from the companies only. For you get it like contracts, bank statements, invoices. Those are the things, normal evidences only. It's not any special evidences. The analysis part only is different from the audit, normal audit and forensic audit.
Do firms offer internships for forensic accounting?
Firms, yeah, they do. Yeah, there are like a lot of there are firms which is doing specialization in forensic audits now. Maybe they are not so much like audit firms, but they do have started specializations, so they would provide.
Do we have any diploma or executive programs on forensic auditing for
Sorry,
beginners?
I
Do we have
sorry, I can't.
diploma?
Your voice. Diploma.
Do we have diploma or executive programs on forensic auditing for beginners?
I'm sorry, I couldn't hear your voice.
Am I audible?
Yeah.
Do we have any diploma or executive programs on forensic auditing for beginners?
For beginners, yeah, like the course which I mentioned earlier was for beginners only. So it's in the course, it's a duration of 3 years. In that period itself, you have different levels. You have essence, preliminary, inter and advanced. So those are the, like, for each year, each level you'll be crossing it. So it's beginners course only. Other than that, you're asking, or anything else?
Thank you, ma'am, for answering all our questions. I would like to invite Ms. Mahashri, Assistant Professor, Department of Accounting and Finance, to present the vote of thanks.
Good afternoon to one and all present here. I deem it a great honor and privilege to propose the vote of thanks on this occasion. I'd like to begin by remembering God Almighty for making today's webinar a resounding success. I take this opportunity to express my gratitude to our revered founder, the real Ethiraj. My heartfelt thanks to our resource person, Chartered Accountant, Ms. Sharanya Pandey, Senior Consultant, FinTech Advisory Services LLP, for enlightening us on the topic of forensic accounting and fraud detection. Thank you, ma'am,
for giving more inputs about forensic accounting and helping our participants for widening their scope for higher education in this field. Thank you, ma'am. I take this opportunity to thank our college management, board of trustees, principal in charge, Dr. Tirumati D.B. Usharani ma'am, and vice principal self-supporting Dr. Tirumati T. Usha Priya ma'am for their guidance and constant support. I express my sincere thanks to our beloved head of the department, Dr. Tirumati M. Jayanti ma'am, for arranging such an educational and engrossing webinar for us. I extend my gratitude to all the hardworking and dedicated faculty members of our department for their constant work in all the time. I thank the organizing committee for their contribution and support for making this webinar a great success. I thank all the good hearts who work behind the screen. I extend my heartfelt thanks to our supporting staff for the technical help. Last but not least, I thank all the participants who have enthusiastically registered and actively participated in the webinar. Once again, I thank all for your attention. Thank you.
And thank you, Jayanti ma'am, for this opportunity. Thank you, Ethiraj College, for this great opportunity. It's great working with you. Thank you.
There is one more question we would like for you to answer, ma'am.
Yes.
What is the difference between forensic accounting and forensic audit?
So forensic audit is what they usually do after your fraud is detected. So major difference would be based on just the level of people who are involved in it. So as discussed, I would say if a fraud is done by your employees, then it would be a forensic accounting, and if it's done by the management and other board of related things, it's forensic auditing. So forensic audit is a very wider scope than compared to forensic accounting. So kind of a similar context only both, but
Thank you, ma'am. And thank you, everyone, for attending an informative webinar on forensic accounting and fraud detection. The link for the feedback form has been posted in the chat box. I encourage you to fill it. On behalf of the Department of Accounting and Finance, I once again thank everyone and making this day a grand success. This is not the end. This is not even the beginning of the end, but it is perhaps the end of the beginning. Thank you and have a great day.